Hi, everyone, and welcome to our virtual meetup, Be Our Guesty, with an optimistic flair to it today, the day after COVID-19, preparing for the return of travel. My name is Verd Raviv Schwartz, President and CEO of Guesty, the short-term property management platform. And before I introduce our distinguished guests, a few reminders when we are starting. Be sure to grant all necessary audio permissions so you can hear us. And remember that we cannot hear you. However, we encourage you to submit questions throughout the panel. You can do so by clicking on the Q&A box at the bottom of the screen, typing your question and submitting it. We will be recording this event and sharing it via email for later access. And with that, I'd like to thank our amazing panel of experts, Scott Shatford, CEO of AirDNA, Jesse DePinto, co-founder and CPO of Frontdesk, and a woman who needs no introduction, Amy Hinote, founder and editor of VRM Intel. Thank you so much for participating today. Our agenda will begin with some introductory remarks from me, followed by a discussion led by AirDNA, Frontdesk, and VRM Intel, each telling us about preparing for the return of travel, then followed by a panel discussion, and at the end we'll leave some time for Q&A. As I've mentioned, please submit your questions. We do have some questions you have already submitted prior to this panel. A few words about us for those of you not familiar with Guesty. We're an end-to-end software solution for simplifying the complex operational needs of short-term rental property management, including anything from distribution, calendar management, guest communications, data analytics, task automation, and so on and so forth. In addition to our tool, we have a marketplace with over 80 partners providing additional software services for property management, including channel management, dynamic pricing, smart home automation, and so on. So you can really manage all your short-term rental business from the single dashboard of Guesty. And going to COVID-19 information, what we've seen throughout COVID-19 in the past 2 months is the creation of new travel personas. This included, of course, displaced and stranded travelers, and a lot of people looking for places to isolate and get quarantined as required by law, but also a lot of people that just chose to leave the big cities, find a more comfortable home for that challenging period with more outdoor space, especially families with kids. We also saw, of course, healthcare and frontline workers looking for short-term rentals. And what we found pretty surprising is that we saw business workers who needed a nice work from home environment and also chose to opt in for short-term rentals. So very different from the standard traveler we've seen before. As a result of that, we saw new travel patterns that we haven't encountered pre-COVID. In particular, the stay per reservation has doubled globally from 4.5 before COVID-19 to 9 days during COVID-19. A lot of it was led by property management companies pivoting to longer stays, 14 plus, even 30 plus stays, to accommodate for those new travel personas who were looking for something different. The interesting thing is that even with the reservations for the rest of the year, we still see longer stays than pre-COVID, and I'll talk about it later. When we're trying to look at what's going to happen going forward, are we starting to see the end of COVID-19? We do see some optimistic sign reviewing our May data compared to April data. US is leading the way with reservations for May increasing 83% compared to April. It's followed by Australia with 75% increase in new reservations created in May versus April, followed by some additional countries, Canada, UK, France, also seeing some positive signs. An interesting one is Italy, where we see 140% increase in new reservations in May compared to April. However, as you can imagine, we're still a long way from getting to pre-COVID numbers. Europe was hit the hardest as per our numbers and our data, and we feel that there's still some time until the European countries go back to pre-COVID activities. But again, we do see signs of optimism. The future, however, we feel looks even brighter. When we analyze our fall and winter data, we see Labor Day weekend reservations being at the same rate of the 2019 reservations, which we feel is a very good sign, and an uptick for reservations for the winter holiday season. So if you look at Thanksgiving, Christmas, and New Year's Eve numbers, we're actually above reservations created at the same time for 2019. So if we look at June reservation creation for the holidays, they're better this year than last year. That leads us to believe that a lot of people have pushed off their vacations from spring and summer to fall and winter. And we also see a longer length of stay for fall and winter compared to last year. So we're still not seeing it go down to the 4.5. We still see longer stays going forward. I would like to refer you to some information that we've got in the Guesty Info Center. You have the link here on the screen. You can find a lot of articles, informations, and tech tools to help you mitigate the difficulties of this crisis. You don't have to be a Guesty user in order to go into the Info Center and use the resources, and we welcome you to do so. Another resource I want to point out is our new industry report, the state of the short-term rental industry amid COVID-19. We've surveyed about 400 different property managers worldwide about how they're coping with COVID-19, what kind of trends they are seeing, and you can review the report and get a lot of interesting insights. Two, I want to point out in terms of coping with COVID-19 that we've seen work for the surveyed property managers was more flexible cancellation policies. 22% of them changed their cancellation policy as a result of COVID-19. And many reduced daily rates, in particular in exchange for longer stays. So those were two strategies implemented by the respondents. And finishing it off with a sneak peek that's not too positive, the impact of COVID-19 cannot be understated. We have only 5% of respondents that said that their revenue was impacted by less than 10%. So 90% of respondents said that their revenue was impacted over 10%, and almost 30% of respondents expect a decrease in their revenue for the entire year 2020 of 51 to 75%. So it is an impact to be dealt with. But again, we do believe that we have signs of optimistic future, and we're looking to see a ramp up in the next coming months. And with that, I'd like to introduce our panelists again and allow each of them to present their story and their insights. We'll start with Scott Shatford, CEO of AirDNA, who will share with us some data-driven insights and industry predictions about the near and longer-term future, followed by Jesse DePinto, co-founder and CPO of Frontdesk, that will tell us all how his company managed to actually thrive during COVID-19, and also tell us how he's preparing for a ramp-up in bookings going forward. And last but not least, Amy Hinault, founder and editor of VRM Intel, will share her insights and explain the shift she sees in the industry as a result of COVID-19. Scott, take it away.
Great, will do. Let me share my screen here real quick. So it was a good setup for me, Vered. I think we're seeing a lot of the same exact trends, which is interesting since we didn't compare notes beforehand. So yeah, I'm going to dive a bit just more into the data, a little bit more granularity on what exactly these trends are. I mean, there's definitely a recovery happening, and the recovery is probably happening quicker than we would have imagined. You can see here total new booking volume by continent. And, I think we were actually surprised about the resiliency of new bookings, even in the lowest points of the trough. We are still seeing, like you said, people booking properties, just different types of properties. I like your term, the cityscaper. I haven't heard that one before, but that's a lot of what we saw is people, fleeing the New York City's major metropolitan units and going to the Hamptons or Nantucket or whatever it is to sort of ride out the storm. So it never went to zero. It wasn't ever as impacted as the hotels. But that was, in leisure markets, there was resiliency. In the metropolitan markets, it was pretty rough. But we see that rebounding quickly. And we see a lot of pent up demand, being as soon as cities open up, there's a lot of people that have been antsy to leave the four walls of their home and get out and explore. And it's coming back really quickly in that first week when cities are opening up. So we are seeing, this is a couple weeks old now, but we are seeing booking levels that are pre-COVID globally, but obviously it's a very different story in each country. So what we see here is booking volume, busy chart, I apologize, but we can see that it's an uneven recovery really based off of the countries. We can see, like you said, Australia is recovering very quickly, US very quickly, Germany very quickly. These are new booking volumes by country, over the previous, whatever it is, 10 weeks. We don't see, and with some updated data, we see this sudden spike in new bookings as markets open up, and that sort of plateaus. So a lot of these charts, this is really the high in new bookings, and it's really plateaued in the US to be around 800,000 new bookings each week for the last 3 weeks, I believe. So obviously it's an uneven recovery story. It's all about, how quickly they contained coronavirus, how quickly they opened up. But the signs are really strong that vacation rentals are going to perform well and probably a lot better than their hotel counterparts as we get into this recovery. So yeah, the bad news and the good news is we all know the cancellation rates were ridiculous, up to 90% at the peak of coronavirus. But what we do see is that the cancellation rates have come back to relatively normal levels. Where it was about 14% pre-COVID, we're seeing that same cancellation rate going into the end of July. So that is a bright spot. Now talking to some of the trends in sort of more detail that you talked about, which was, longer term stays. We've never seen a trend like this happen quicker than how many long-term, greater than 2 week stays occurred during COVID. So you can see that, call it roughly 75% of reservations were 1 to 7 days pre-COVID. Immediately when COVID hit, the majority of bookings were for greater than 2 weeks in length. And that we see now that that's sort of tapering off, and we'll taper off over, call it 6 months to get back to what we would imagine to be more normal levels. You can see kind of the volume of these 31 to 90 day reservations going from 5% to about 20%, overnight. But what we do see is that return to normalcy on this moving forward. Sort of same chart, different look at it, which is the booking lead time. What we saw was something that we never would have imagined, is that people were booking same day reservations for 90 days, right? And so we saw all these bookings happening immediately. There was immediate need. They were going to go visit their immediate family, or they needed to get out of Dodge, right? And so what we saw was this crazy, sudden, demand in immediate travel, and for some of the reasons that you outlined previously. So we see the same thing, gradually returning to normal. I think the average booking lead time is now in the 40s. Where it was a lot less previously, don't know the exact number, but what we see is just general, gradual return to normalcy in terms of booking lead time. When we look at the pacing, right, this is how much revenue is on the books moving forward over the next 6 months. There's still a big gap between where we are today versus where we were in 2019. But that gap really narrows. And I'm surprised we have the same date, Labor Day, beginning of September, is when we don't really see much of a difference between this year and last year. And this is very US specific. Every country is a bit different. But yeah, we still see a lot of room to be made up over the summertime. We do see even slightly higher booking volume now than we did last year. So this margin might be able to be collapsed a little bit, but we don't see sort of normal reservation volume until September timeframe. I think the most interesting new data we've been able to pull recently is, we track every single review left on the Airbnb platform, and we can sort of connect where people are traveling from and where they're staying. And here's a highlight of, the top 10 or 15 markets in Europe. And we can see how far people are traveling when they're traveling to Europe, right? We're seeing the median person is traveling 1,800 miles to Amsterdam and 4,000 miles to Dublin and 3,000 miles to Paris, pre-COVID, and how far they're traveling now to get to those markets. They're traveling 19 miles to get to Paris where they were traveling 3,000 miles before. And this is obvious, right? People are traveling from the US. There's a lot of borders that you have to get through, which are open or just now opening. So what we do see is, the recovery is going to happen the quickest in these drive to and train to destinations for all of our Europeans. That is just going to be the nature of who's going to recover quickest. Our markets that are more rural, that are more reliant on domestic travel, that are just longer stays in general, are going to recover quick. And, this is probably the best indicator of who is going to recover the quickest is how far people are traveling from, islands and stuff aren't going to, recover as quick as some of these major markets and these markets you see here. So I think that is what I've got. We have lots of great information on our blog. A lot of this data is there. We're coming out with lots of research on a weekly basis. So yeah, come check us out on our blog and feel free to reach out to us if you've got any questions. I will stop my share now and hand off the baton.
Thank you. Great data, and I'm glad to see we're aligned in the way we see it. And I will now allow Jesse to share his screen and tell us about his success. And what's amazing about Frontdesk, for those of you who are not familiar with their story, they've actually managed to raise their Series A of $7 million during Corona times, which I think is quite amazing. And I'm sure a lot of people would love to hear how you've done it and how you've coped with the current situation.
Sure. Thank you, Vered. Let me just share my screen here quick. Yes, we raised a Series A. We just closed it, and we actually ended up raising more than we thought we were going to raise before COVID. So it goes to show how supportive our investors are, but also shows hopefully some optimism in the future, specifically in the urban space. Like Vered mentioned, I'm Jesse DePento, one of the co-founders at Frontdesk. Just a quick snapshot of Frontdesk. So we are an urban US-based short-term rental management and technology company. So our perspective is probably different than the others in terms of our focus. So US-based urban multifamily apartments exclusively. And also we tend to do more tier twos, less New York, LA, San Francisco type of cities, and more Milwaukee, Indianapolis type of markets in the US. So we're just over 3 years old, 27 cities, 500 apartments, over 100 apartment communities. And we are vertically integrated through technology down to our cleaners. Just a few observations to, you'll see some similarities and some differences based on mostly the urban nature of what our inventory is compared to what Scott and Amy see. Number one is just the total projections based on what we were expecting. So this is, again, exclusively to Frontdesk. And we don't like to track occupancy because obviously the rate that you're charging matters just as much as occupancy. So we look at how are we performing compared to projection. So in January and February, and this is adjusted for seasonality, January, February, we were pretty on target. So we're pretty on target with projections. March, it started to hit us. April was brutal. So May is starting to bounce back. And from what we can tell with June, July, August, we're starting to see definitely a rebound starting to take place. Travel demand also, as you can imagine, appears to have bottomed in April. And what you can see here is the total bookings in terms of volume and number of bookings versus the total cancellations. So where it got real scary was around mid-April, where we were having more cancellations than we were new bookings. Obviously, we had to have some realistic conversations, and we had to make some drastic changes when it got to that point. Fortunately, things seem to have subsided, but or at least shaping up and trending in the right direction. But you can tell the cancellations are still above average. So we are still facing a lot of cancellations. We've always had a flexible cancellation policy, so that helps us attract new bookings. And the downside is that we have to honor those promises with anybody that wishes to cancel. So we still are seeing a fair amount of cancellations. Number three, and this is again something that was mentioned already, but short-term rental stays are becoming a bit less short. So you would think that, and this is purely based on average number of nights via our direct booking site, stayfrontdesk.com. And so what we're tracking here is how long are people staying with us. And January, February, we were more of a short-term rental company, and we're starting to evolve into a short and mid-term stay company, as is the industry. So that was one of our pivots. So some of this is organic and some is inorganic. On one hand, the travel demand today still continues to be people that need weekly or monthly stays, digital nomads, traveling healthcare professionals, all of the personas that were already identified. And then, of course, the other half is inorganic here. We, as a business, decided to take drastic measure to enhance our efforts on the more longer-term and mid-term booking sites, along with our own direct channel, to encourage more mid-term stays. And a lot of that is influenced by price. That's the biggest lever we have with mid-term stays, is to offer a reasonable enough discount that encourages people to stay with us longer. But we've also added a handful of new booking channels to our channel distribution mix to encourage some of those longer term bookings. And as you can see, the trend is continuing to go up. I think June, it might start to plateau. It definitely feels like it's plateauing, but it's surprising that even though travel is reopening and our rates are getting more expensive from an ADR standpoint, people are still booking longer term. I think that one observation here is that the consumer mind has shifted and realized that they can book monthly stays on Airbnb, for example, rather than going to Zillow or Facebook Marketplace to try to find a furnished unit for 3 months. You have a lot of displaced college students, and the option is whether to move back in with mom or try to find somewhere for a couple months. So I'll come back to that, but we expect that to continue. I think I skipped a slide here. The other thing is people appear to be planning trips ahead. Some people call this the advanced booking window. We just call it the average number of nights between the time you book and the time you check in. It seems this is a good sign that the world is starting to get a little more predictable, at least in the mind of travelers. They have more confidence booking trips many days out. We are, in the urban side, generally on the low end of this spectrum. Our average, even before COVID, was about somewhere between 10 and 20 days in advance that people are booking with us. Obviously in April that shortened, and it's starting to bounce back in May. And that trend is continuing to trend back up towards stabilization, which is promising. Number 5 is just the owner side here, what we call our multifamily side. We partner exclusively with apartment communities, and the question is the master lease going to continue beyond this? And verdict's still out, but at least from our perspective, we are switching gears very quickly toward revenue sharing agreements. So I imagine that's the case with many property management companies like us that are in the urban space that are still alive. I expect this trend to continue, and apartment owners to get more receptive with more revenue sharing agreements. Quick industry predictions. Obviously, there's been a fair amount of consolidation. So, Stay Alfred went down from 32 cities to 0. Lyric, is down to 1 city now. So there were a lot of both VC-backed competitors, but also the long tail of the Airbnb hosts. We were shocked to see how many regional players have, with 10 units in one city, have reached out to us looking for support. So there is definitely going to be a continued reduction in supply in the short-term rental world, and also professionalization. Those who are have the staying power right now appear to be more in this for the long haul. So we're definitely seeing consolidation and professionalization. You have to be professional for cleaning to get the bookings, so that goes without saying. But also professionalization in terms of how do you manage the short-term guests in mixed-use communities where you're sharing buildings and access with long-term residents. The other trend we're seeing is digital nomads going mainstream. I think that this one prediction, and take it for what it is, nobody can predict the world right now, but we're seeing a lot of people that could work from home now working from anywhere. I think as employers are increasingly getting pressure to send their workforce home to work, and seeing that productivity hasn't really taken a hit despite the remote nature of the jobs now, then soon the trend, and we're already starting to see it, is that people are realizing they can work on the road. So what was once a niche, I think, is starting to become mainstream for the digital nomads work from anywhere movement. And then beyond that, the rise of flexible living communities. So there are a handful of the Nido type properties that are growing in presence right now. Not as well advertised as Nido, but they're certainly growing in number. And these are entire buildings where the entire agreement is, whether you're a short-term rental or a long-term resident, you're sharing the same amenities and living in, you have rules regarding that type of use of building. So what I think some trends escalating this is the digital nomad movement is pushing this. Certainly they're hopping from community to community and living in different cities. But beyond that, I think this gives rise to urban affordability. As a long-term resident, if you have the ability to share your apartment on short-term rental sites, it makes it more affordable to live in that downtown urban area. And as jobs continue to, and unemployment continues to be high, and it continues being a challenge to make rents, especially in the dense urban core central business district areas where rent is already very high. This is a trend that we continue to see, is the ability to make it affordable, but also an amenity, and definitely a great place to travel if you're just a guest. So that's my presentation. You can find more at stayfrontdesk.com. I also put out a white paper. There's a link down here, stayfd.co/whitepaper, specifically on navigating multifamily short-term rentals in a post-COVID world. So I encourage you to download that, and love to hear your thoughts. Thank you.
Thank you, Jesse. Very interesting and very encouraging information, if I may say. And I would like to pass the torch to Amy Hinote to share her insights with us and tell us how our world is going to change with post-COVID-19 predictions.
All right, so I agree with everything that Scott and Jesse said. I think that the biggest thing that we are looking at right now is trying to understand how our market is reacting, how the industry is reacting across segments. And we haven't done a great job, you and I have had this discussion before, at segmenting our industry. So we have like the leisure, holiday home, vacation rental, traditional world. And these vacation homes have been there for a long time. They're villas, cabins, beach houses, that whole space. And then you've got the urban space that Jesse is talking about. And then in these tier 2 cities, like he's talking about, and even further, there are some of these residential areas that are primary residents that rent during weekends or during events or during conventions, something big going on in the city, but they're not really they're not available for rent all the time. So we have these 3 segments, and on channels like Airbnb, you can find all 3. But they're all performing very differently right now as a result of COVID. So I just want to address really quickly all the shared spaces and the primary resident spaces. Most of those have been have come offline. We're not seeing a lot of shared rentals right now coming back after COVID. I think there are a number of reasons for this. One, the events aren't happening, so those major like Coachella and things like that are not going on. But I also think there is a thing about staying at someone's house right now that people aren't totally comfortable with, or having people stay at their house for that matter from the host side. But looking at urban and the urban versus the leisure market, and I realize there are leisure travel in urban apartments, but that's kind of how I'm distinguishing it here. There's a big difference in how those two sides are performing, and there's also a big difference in what we're expecting to see out of these funded multi-destination companies versus the local self-sustaining companies. So overall, in leisure, some of the challenges have been the closures, the community concerns, and the cancellations that are going on. But the demand has been still really strong for the leisure properties. So a lot of the leisure properties actually wanted to book, but they weren't able to because there were restrictions that were based on the community or the state or the country, whatever was going on. There wasn't the ability to book. But the minute they turned back on, these properties actually did really well. The urban market had additional challenges. First, they have these fixed lease payments, so they still owe money even when it's not coming in, which was always a risky model. I wrote an article about 4 years ago on this. Our industry is about risk mitigation, and when you take on risk, it's especially unacceptable risk, then the industry starts to fall apart in really weird times, like a pandemic-related event. And so that's been a concern here. And I think that's why we've seen situations like Stay Offer going out of business. The urban demand took a huge hit. So a lot of business travelers, leisure travel into major city centers, those things really fell off. And we haven't seen a huge rebound in those two sectors yet. So the demand is still off on the urban side, which Jesse pointed out. Even though we are starting to see these cities open back up and necessary travel coming back in, I think that's why we've started to see these extended stays, some pricing changes, ADRs have come down, RevPAR is down. What I think is coming is what he was talking about, this digital nomad situation on the demand side. I think that's important because we've had situations where people haven't had to pay rent for a month or two, that they've had some time and they're going to have to catch up. So chances are they're going to move out rather than pay 3 months of back rent. And all these people, like you said, are working from home now. So I think you'll see a lot of 20 and 30-year-old, in that range, 20s and 30s, hit the road. And I spent 3 years as a digital nomad. It's a fun thing to do. It's something that has gotten a lot of attention lately as being a real benefit personally. So I think that we will see a lot of that, and I think that these urban areas can benefit from it. The other thing I think is going to happen is that I think we've got some commercial spaces that are not going to be reoccupied into businesses, and those spaces are open to be converted into short-term apartments. So I think new companies like Jesse's have a real advantage over legacy urban companies like a Lyric or a Sonder, who are tied into some old business models. Like the new companies have an ability to pivot, have an ability to spot these opportunities and jump on them, where the older companies, and I say older because that's funny in this sector right now because this isn't old. It's a fairly new industry for us, and I think that that we could see a lot of that. Now, when you look at the multi-destination companies versus the local companies, what we're seeing, the challenges for everybody right now are managing cash flow. There are delayed payments from Airbnb, from Booking, from Airbnb, Vrbo. The credit card processors are delaying payments now. Channel managers who are merchant of record are not paying on time. So there's a real cash flow issue, but it's hitting the larger companies harder because they're more reliant on distribution. And it's just the bigger the hit, the bigger the impact, across destinations, it starts to become larger. So I think the the local companies have some real advantages right now. And first of all, it's understanding your own market. You manage all the changes in one region instead of over multiple regions. So all the regulations, for instance, in one state or one country versus trying to manage every single regulation in every city and state and country in a huge portfolio, it's a much bigger challenge right now for multi-destination companies than it is for a local company. There's an ability to pivot when you manage in one destination. You know who your guests are, you know where they're coming from, you know who's coming and who's not coming, so you can focus your marketing efforts directly on your targeted feeder market. And that's very difficult to do if you're a multi-destination company. Also, the big shared services and executive team that layers over a large company, that's something that a smaller company, that a local company doesn't have to manage. So from a financial perspective, it's a little bit easier there. And also relying on this outside funding, and Jesse could probably spend 2 hours talking about this. There's a whole world in managing investors and trying to make sure that you have enough money to go forward to get through this event. Because it just raised $108 million, which I think gets them through maybe 4 or 5 months right now. So there's a real question about where to go from there. So I think there is for the companies who are local, and are self-sustaining, there's a real advantage right now in this particular market of being able to control your own destiny. And the other thing is that local companies are not really totally reliant on Expedia, Booking, and Airbnb for bookings. There's a little bit more diversification. There are a lot of repeat guests, brand recognition, and direct bookings that are going on there. So I think there are some real advantages for the local companies right now. This is just an example of how opening happened. These are just these are core vacation rental markets, and these are professionally managed properties. This doesn't include owner managed properties. But this is for the month of June. So this is what occupancy was pacing. We were having a really good year before COVID. That's what's so incredibly frustrating. People were up, somewhere between 5 and 20% in bookings, and it was incredibly frustrating to see this happen because it was looking like it was going to be the breakout year for vacation rentals. And then you can see where it pretty much bottomed out. Now, where things started turning around is in that second week of May when things started opening. So what we saw, and you see in green, Hawaii is still very, very far down for June because they're not open yet. Colorado just opened. So that uptick that you're seeing is very recent in the last few days. And but on the Gulf Coast, some destinations opened and some didn't. So it's been really interesting to see across the board. The beach destination, like the Southeast Atlantic coast and like the Gulf Coast, ticked up pretty close. And this is this looks at March, April, May, June, and July performance. But looking up through July, the numbers are starting to get closer, if not over, 2019. And so the reservations are still pacing pretty high for July now. So we're starting to recover if you're open. Looking at markets that aren't open and are open later, you see that they're not getting there at all. So I think it's just it's so market by market right now. And this is, again, where a local destination has a lot of advantage over a multi-destination company because they can just manage their particular spot. As far as the consolidation goes, what we're seeing is that the funded companies are looking for some exits right now. These funded multi-destination players on the traditional side are looking to get out. Right now, the VCs are looking for some entry opportunities, but they're also, the ones who are invested in these companies are also looking to find a way out, which is what's pressuring some of these exits. I do think private equity is the buyer right now. You asked me about the hospitality companies and the hotels, are they coming in? I think I believe they're going to be too focused on their current portfolio. They have a lot of work to do to get back to anything normal. And I don't see an appetite for them to diversify right now, especially as they watch Lyric and Sonder and Stay Alfred struggle right now. So I don't think that we're going to see a lot of hotels coming in right now. I think private equity is the exit, but what we've seen is private equity not being able to manage a portfolio. So like when private equity, Platinum bought the Wyndham European inventory, we've seen them sell that off in pieces right now. I think Vacasa is actively selling its European space right now. So what I did on the bottom here, I put some things together that I'm not going to go over, but at vrmintel.com/beourguest, you can find these things. I just wanted to throw some elements together of things that I think are going to be the new normal in terms of marketing, property care, and financial management. But overall, where I think we are right now is this year, 2020, is going to end up being a really good year for vacation holiday home rentals for that traditional market. I think the urban market is going to have to get really creative for the remainder of 2020. But I also think if they're focused on the future and they have the runway to get to 2021, there's a real possibility there. Being financially responsible and trustworthy right now. Trust has always been what's important in this industry. It will continue to be. And making sure that you're taking care of these homes and these homeowners and the guests in a financially responsible way, I think is what's going to push everyone ahead right now. So that's what we're seeing on our end.
Thank you, Amy. Super interesting to get the leisure and the traditional vacation rental perspective in addition to the urban perspective. And now I'd like to open it, our panel discussion, and I'll start off with a question to all of you. What would you think would be the biggest change for short-term property rentals post-COVID-19, and how can property managers prepare for it? And Amy, let's start with you.
So it's a really big question, actually. I think that the biggest change right now is probably going to be around marketing and pricing. I think that the target market has shifted quite a bit. Skift is calling it radically local, and I completely agree with that. I think that your target market right now is learning how to geo-target and spend money there and not try to buy the whole world. I think is really going to push some people ahead. The property care stuff would be a close second.
Yeah, I would say it's sort of flexibility. I think, that's one thing that vacation rentals have really lagged hotels on is that flexibility, the cancellations. And obviously we've seen that change dramatically over the last month. So I think what we'll see is, consumers' expectations to book something, 9 months in advance. They want to make sure they're going to get 100% refund, which hasn't always been the case for vacation rentals. So I think that will sort of be the long-lasting change is that, vacation rentals and hotels will look a lot more similar as it comes to sort of cancellation policies in the future.
Jesse, any point of view?
Yeah, I would say flexibility as well, but more on terms of the use of the space. So being able to pivot from short-term to long-term, that requires investment in technology and channel distribution. So beefing up the technology has never been more important. If you add to that contactless entry and all of that. Beyond that, it's a bottom line focus. I mean, I think the more destination VR industry has kind of figured this out before, but the urban space was a little late to adopt the idea of profitability and unit economics. And so I think just a renewed focus and emphasis on a business that's actually profitable rather than a kind of blitz scaling business will just be more important for sustainability.
Great, thank you. Scott, a question for you. We talked a lot about suburban areas versus urban areas. Do you predict that to continue throughout 2020? Should we be focusing on rural areas more than urban areas, or do you see that shifting back to a normal balance? And would that be a result of restrictions or a result of traveler preferences?
I sort of wish I had more optimism about the urban market in the major metropolitan markets, like the top 15 markets in the US or elsewhere. I think the hotels have been punished so hard that, you know, they've been reducing their rates. They sometimes have an advantage too with like cleanliness standards and branding and just sort of consistency of stay in the metropolitan markets. I think it's going to be a long recovery for major metropolitan studio, one bedrooms, you know, type of supply. You know, the hotels are predicting 2023 to get back to 2019 levels for those types of properties. It will be a bit quicker, but only if we really are seeing longer stays. We're really seeing this digital nomad trend play out, and that's where they have a true advantage. You know, if you have a kitchen, you know, that's great for a longer stay. You don't have to go to restaurants and the uncertainty of that right now. So I think it really will be a pivot to those. The midterm stays is going to really help that segment survive in 2020.
Jesse, you talked about it in your presentation, but I think a lot of people on this in this meetup are looking at you and saying, wow, everybody's talking about the decline of urban rentals, and there you are actually raising money and really weathering down the storm amazingly. Could you give us what would be the major secret, or what was the best thing you've done to really weather the storm and pivot in a way that allowed you to survive this crisis so successfully?
Thank you for that. Certainly a lot of luck. To be honest, the timing of our Series A was certainly a big part of that. The support of our investors to actually double down was a big part of that. And the fact that we're focused on tier twos mostly, at least up until now, instead of tier ones, where there's more dense, more COVID outbreak kind of potential. I would say what we did right was a focus on sustainability. We had a internal hashtag called sustainable growth before any of this happened. You know, we saw the way that our competitors were going, and before COVID even broke out, you could see some of the VC-backed competitors making some pretty drastic moves before any of this happened, and it indicated that there was just not a focus on that sustainability. So we always we never predicted this in a million years, but we were anticipating some kind of slowdown or recession in the next year or two. So we wanted to prepare for that and glamorize sustainability. So it really comes down to the unit economics. So most of our properties, the underwriting we do is key. So we don't sign a 12-month lease unless we have a pretty high confidence that it's going to make a valid return. I think a lot of our competitors glamorized more growth and top line revenue than profitability. And so I can't emphasize enough how important underwriting is, especially if you're committing to any type of rent guarantee. But it's, you know, a Midwest-based culture of looking at a profitable business rather than a unicorn. We never wanted to be the unicorn. We wanted to grow a sustainable business and be in here for the long term. So a lot of luck, but a little bit of strategy there, I think, has helped.
Interesting. Strategy and humility. I think that's one thing that I feel COVID-19 taught us in a way is, you know, let's not try to shoot for the moon immediately. Let's plan ahead. Let's be a little more conservative. And hopefully that will allow all of us to be more successful going forward. Amy, you talked about consolidation in your presentation, and I'd really like to pick your brains a little more about that. What kind of consolidation you think we'll see in the industry in the coming months? You know, maybe not just in the specific markets you talked about. Where do you think we'll see most of it, and how will it impact the way the property management for short-term rentals is managed going forward?
I mean, I personally believe that right now, if you have the appetite to survive this, you should. For people who are thinking this is the right time to sell, I mean, if you have to, that's part of it. I mean, that's a decision that has to be made. But I don't believe that if you can survive this, you should. Because in 2021 and 2022, there's going to be a much bigger opportunity in our space. What we're seeing right now is a real shift from hotel travelers to vacation rental travelers. And we haven't seen one of these. Sky can remember when Airbnb started, it happened. When they started to get big, we started to see a shift. When Vrbo got to be big, we saw a shift. But we haven't seen, I mean, this is the third one we've seen in my lifetime where you see a real shift from hotel travelers into short-term rental travelers. And that's a big deal. So right now, what's going on is an anomaly in cash flow, demand, all this kind of stuff. But if we recover, if you assume we're not in the apocalypse, then this industry is going to rebound pretty quickly. So things like terms about how you sell, do you get cash up front or get it over time? Those things are going to change. So if you can survive this, do. But consolidation, I think there are companies who are not going to be able to. And I think Stay Alfred was a good example of that. Sonder is now, they were supposed to announce a $150 million raise coming up to cover their. Now, I think that was interesting. You're looking at Jesse over here raising $7 million for sustainable growth because that's what he needs to grow his business. And then you look at a Sonder or a Vacasa raising over $100 million to stay alive. These are very different scenarios. And so these companies, if they cannot make it, if they really cannot survive this, they have to find a buyer. Or they're going to do what Jordan did and just shut it down. And the investors don't want that. So anyway, there's a lot of play here, but I do think that private equity companies are looking to make a deal right now. And I think that we will see some sense of some exits at these multi-destination companies, but I don't see it coming from the hotel space right now. I just don't. Some people do though, so that's my opinion.
Yeah, thank you. Scott, a little data about domestic versus international. Everybody talks about the fact that domestic is recovering earlier. Do you have predictions for later in the year if we are going to see international travel return, or will we be staying focused on domestic stays for the rest of the year?
It's a good question. I don't typically like to do some prognosticating on stuff that I don't have data to support. It's really hard to tell, right? And everything I have is pretty anecdotal in nature in terms of will people feel confident to make that European vacation? I don't know. I should get some airline data and figure out that answer there. I think it's unlikely for it to be a quick rebound. I don't think it's going to be this summer. And obviously, when we get into October, November, those are the worst months of the year, when I think people would be confident enough, where a booking window is greater than 90 days, typically for a European stay. That means they'd have to be booking right now for that peak sort of August, September time period. I think we're going to miss that gap. I think we're going to get into the fall when it's low season, bad weather, not a great time for the European, especially the cities. So I think it's going to be a 2021 recovery, probably March, springtime, for that to get back, on track.
Thank you. Jesse, I want to ask you about guest experience during these times. We all know that for any hospitality brand, guest experience is key. And how do you see that shifting, or how do you intend to manage it in a contactless world, basically? How do you still create a personal touch for the brand?
Sure. I probably don't have any insight that would be surprising. It's mostly what you can guess. So consumers don't want to interact with people. They typically didn't want to, but now they feel unsafe doing so. So definitely self check-in and secure remote access. So digital door locks and the like are not just important now, but essential. And you're starting to see a lot of hotels actually shift toward that model and borrow some of the tech that short-term rental operators have used. So. And then cleaning. I mean, it just comes down to, if you are a consumer, what would make you feel confident in staying in a unit? And the expectations for cleaning have certainly increased. And so we've had to take many measures to not just increase our cleaning standards, but also promote the fact that we're increasing our cleaning standards. So, Airbnb's cleaning protocol badge is one example of doing that, but also just indicating in the listing that the cleaning is top priority for us, and so is the safety of you. So all the traditional kind of guest experience business 101s, just with less people and human interaction in person.
Great. Okay, we only have a few minutes. I want to ask you one last question before we move to a couple of guest questions, and there are a lot of them. a lot of people ask me about business travel. They say, okay, we understand people are still going to take vacation and still going to travel. Do you think business travel, especially as it pertains to short-term rentals, will change forever? Do you see it picking up again this year? Scott, do you want to go first?
I mean, I'll chime in real quick. I mean, just from my personal perspective, it's hard to see it recovering quickly. I think we've all adjusted to a new way of working just internally as a company. I think we've all found that we can still make deals and strike partnerships and get things done without having it, to be over dinner or in person. So I think there's some things that will change forever. Now, do we still want to go to a conference at some point in time? Do we still want to go check out vendors and go and have that camaraderie as an industry? Sure, and that will recover. But this sort of team meetings or closing deals or partnering, that's going to go away. So I think there's going to be a forever change in how people think about work and what's necessary for travel or what can be done online.
Amy, anything you want to add?
Yeah, I think that I was actually just thinking about our data and revenue management conference. Scott, I'll call you about that later, and Guesty as well.
Are you still invited?
Well, I'm considering doing a hybrid event. It's in Denver, so Scott doesn't have to travel very far.
Appreciate that.
But we're considering to the point that some people are ready and some people aren't. So we could still do a virtual conference, but still have an in-person component to it. But I do think that, I don't think we know yet, honestly, on a business travel. I personally believe it's forever this is a major change. This is a transformation in business travel, largely because it was a line item of an expense for many of us that we took it way too far. Like when you're taking 30 business trips a year and you're eating out and doing all this kind of stuff and entertaining, it's an expense on the business. I can't imagine what Guesty's business travel expense looked like in the last, before this hit for the previous 12 months. So I think that, you start to look at those things because we're all looking to be a sustainable business right now. That's changed forever. I do think in our lifetime, and like Jesse, he grew up in the Midwest, I grew up in the South. It's like, your dad taught you to build businesses that delivered value and that didn't rely on other people. And I think that's a real core value that a lot of us still hold. And this whole idea of just taking investor money forever and forever and forever and never actually doing anything that actually makes money, I don't think that's going to be popular anymore. But yeah, I think business travel is going to take a hit for the remainder of the year.
Okay, I'll try to pick up a few questions from the audience. As I've mentioned, there are quite a few, and we'll try to address at least some of them. So one question that came up is about markets that are still closed. How can I address local market, the domestic market, when I'm not catered to doing so previously? Any pointers on that? Amy, any suggestions? Jesse, any suggestions for local marketing when you used to rely on international travel?
So one of the things that I've been telling people is to shift from copywriting to journalism. Like instead of hiring freelance copywriters, hire freelance journalists and hit that PR circuit really hard. Local media is more popular now than it was before because people are looking at local situations right now, local cases, local news. It's more relevant for a lot of people, local protest. There are a lot of things that are important there. So your feeder markets, you can hit them in a more relevant way than you've ever been able to before, but it can't be with copyright, and it has to be with some type of journalism, authentic voice.
Great. Jesse,
I'll do a shameless plug. Yeah, I mean, feeder markets I've noticed that most people don't know what their feeder markets are. It's something that we've worked hard on trying to figure out how to get that data in our product set. So go check it out, because I don't think most people know what their top 10 feeder markets are, what percentage are coming from their top 3 markets. I think it's a really important point.
Jesse, anything to add from your perspective?
Yeah, we're in 27 markets, so it's we have to take more of a digital marketing lens we don't have stories crafted as well as some of Amy's customers in each of our 27 markets. So we're less good at storytelling and more spend our time on digital marketing and technology. But in every market, there's a reason to host people and a reason why people might need to stay in a vacation rental. So it's just a matter of figuring out which keywords people are searching and understanding the clientele in each market to attract them.
Thank you. A few people asked about the UK and recovery trends there. Scott, can you comment on anything you're seeing?
I can comment that it's really hard to figure out what's happening in the UK, and we've looked really hard at it. It's because the way that Airbnb and the platforms have blocked out those listings at different times are sort of blocking out the entire calendar, and it doesn't really appear in the data the way it's ever appeared with those calendar blockings. So, I mean, we're sort of taking this approach at our company saying, hey, no reservations happened in the end of April or all of May. Because it really is too hard to decipher what's happening in those markets from what's happening on the Airbnb platform specifically. You can come to our Market Minder product and type in some cities and see what the recovery looks like in terms of new bookings happening in the future. But I would honestly say April and May are probably a mystery that will never be solved for what happened in the UK from bookings on the platforms because it's just too convoluted.
Okay, I can add that on the Guesty platform, we are seeing an increase in reservations in the UK and London specifically in May compared to April. It's not as big as Australia or the US, but there is an uptick in reservations. So we are starting.
I think too in the UK, the regulations have been pretty, I mean, they're still closed in a lot of the core leisure markets. And so it's, again, I think the demand is there. The demand in the Cotswolds is certainly high right now, but they can't rent yet. And I just think that right now there's a lot of renewed interest in UK travel. So I think as far as an international market goes, that's going to be one of the areas that picks up first. But I do think that there, again, it's a local feeder market thing right now that it's targeting guests within the UK. I think that's what we're going to see a lot of. And I think there's a lot of national promotion there for people to spend their money and stay in the UK as well, as what we've been seeing.
Great, thank you. We are going to show you on the screen a poll that you can take after this meetup that we'd like you to participate in. So you will see it on the screen right now. We'd be happy if you can complete it. Thank you. We will continue with one or two more questions. Just trying to see who asked, what was asked the most. Someone asked about the 2-week stays and the longer stays. How much do you think that they're as a result of travel restrictions, meaning quarantine, etc., and how much are a result of travel habits? Should property managers continue to cater to the needs of longer stays going forward?
I'll just jump in on that really quickly because I don't have as much information as they do. But I do believe that this not during a peak season. I think, if you've got a strong peak right now and you're open, then keeping those weekly rentals right now is pretty valuable. The destinations that are open are doing really well. If you have excess inventory, and definitely past the Labor Day weekend when we get into fall and winter, I think we'll see a lot of that. And I agree with you on the holiday stays that you brought up first. Thanksgiving, Christmas, New Year's. I think these are huge opportunities for the first time in a long time. As people, we've spent a lot of time at home. You know what I mean? There's a real appetite for spending 2 weeks over Christmas, over the holidays, somewhere really magical. And chipping Campton sounds like a really good idea right now.
By the way, what's interesting, we also see quite an increase of the average nightly rate towards the holidays. So it is going back to normal in terms of rates. Scott, you wanted to mention something about that?
Yeah, I mean, I think Jesse hit on it earlier. I think what you'll see is that, this isn't going to be binary. It's not going to be either your short-term rental platform or a mid-term platform. It's going to be flexible. And to Amy's point as well, it's your peak season. You don't want to be taking 2-week, month-long stays, right? In your off season, you do. In your shoulder season, I don't know. It's a mixed bag. I think there will be this trend towards longer stays, people thinking about Airbnb as a place to go book 30, 60, 90-day stays that didn't exist before. Now, is that the best strategy to sort of maximize revenue and profits? I don't know. Depends on the market. Depends on your type of inventory. I do think it's a trend that will stay, but I think as demand recovers, is that the best way to monetize that piece of real estate will be a question that everybody needs to think about long term.
Yeah, I'll just add that a lot of it's temporary. Certainly, rates have dropped. So if you can book a apartment that has no furniture versus has furniture with or without a 12 lease contract for the same price, then you're going to go for the furnished no contract option. So a lot of it's influenced by price today. But moving forward, I mean, we're optimistic that it's not going to go back to exactly how it was. It's going to fall somewhere in between. I truly think that habits get formed in periods of turbulence like this. I mean, Airbnb was born out of the last recession. People are looking for more affordable ways to do things. So I do think to some extent travel consumer habits will stick. But at the same time, once rates go back up to a healthy level, to Scott's point, it's probably not going to be in the best interest of people to take a lot of long-term bookings if they're in a major destination market.
Thank you. Okay, I think that I learned a lot. Thank you, Jesse, Scott, and Amy for your participation. It was very instrumental and helpful, I'm sure, to all our audience. Thank you, everyone, for participating. If you have more questions or we didn't manage to address your questions during this panel discussion, feel free to email us at meetup@guesty.com, and we'll do our best to respond to your questions later and ask our panelists to help us with that. A recording will be emailed later. If you haven't addressed our poll, please do. And thank you, and we look forward to seeing you in the next meetups to come. Thank you, everyone. Bye.
You're